Hi folks, welcome to SQE1 window, and here we conclude our solicitor accounts today on chapter 8, convincing accounts. So, uh, in property transaction, a solicitor may act for either a buyer or seller, and you may know, we go to solicitors once we are buying or selling properties. Of course, very expensive solicitors and sometimes cheeky solicitors, very hard to find them. So any money received before the transaction completes is considered client money. How we record these transactions depend on whether the solicitor acts as an agent or a stakeholder. So we need to remember it is essential to log all receipts and payments in the client ledger account to comply with SRA, rules. So we need to understand it is client money. We need to understand what is recording method that goes in two ways, both agent and stakeholder, and we need to record everything that is related to client money or overall money matters into ledgers. So the first thing is solicitor as agent. When the solicitor acts as an agent for the seller, the deposit received from the buyer is client money and is paid into client bank account. The solicitor can pass the money to seller at any time. The double entry that we need to do, is to debit cash account client section and credit client ledger account client section. And this ensures the deposit is recorded correctly. And we need to keep in mind if the seller defaults, the buyer may face difficulty recovering the deposit. So the next thing is solicitor acts as stakeholder. Receipt of deposit, how to do it. Like when acting as a stakeholder, the solicitor holds the deposit for both parties until completion. The deposit is paid into the client bank account, and uh, a stakeholder ledger account is opened. And how to do the entry: double entry on receipt, debit cash account client section, and credit stakeholder ledger account client section. So one is debit and another is credit, and that balances. So solicitor acts as a trustee here. Neither party owns the money until the transaction is complete. So another thing is stakeholder completion of transaction. Once the transaction completes, the deposit is no longer held on trust. We record the transfer between client ledgers. So debit stakeholder ledger account client section and credit client ledger account client section. No physical money move, but the record show that the deposit belongs to seller now. So the next thing is acting for a partner of the firm. So money belonging to a partner or sole practitioner in firm is firm money, not client money. However, if the firm also acts for a lender or non-partner spouse, the money is client money at that point. And that's a distinction you need to understand. We've got an example: partner sells his house, deposit received. Now, what you need to do: debit cash account client section and credit client ledger account client section. Those are entries on that you need to do. And on completion, transfer to the business account requires two entries. And these two entries should be done first, like debit client's ledger, credit cash account, and client section you need to do it. And second, debit cash account, credit client ledger, business section. That's what you need to do it, and that ensures partner money is correctly separated from client money. In terms of mortgages, understanding the advance is very key. That what works. Like a mortgage advance is a loan from the lender to the buyer, secured against the property. The solicitor records all receipts and payments in client's ledger account. If acting for both lender and borrower, separate ledgers are optional, but funds must be identifiable and traceable by each client. You cannot mix all of them. So when solicitor acts for a buyer, so that's something that happens many time in convincing with convincing solicitors. So when they are acting only for the buyer, the mortgage advance is paid into the client bank account. The double entry is debit cash account client section and then credit buyer's ledger account client section. This record shows that the solicitor has received the buyer's fund correctly. Next thing is solicitor acts for buyer and lender both. That's a bit big transaction. Sorry for the font, but we had to keep everything on one slide. We'll try to explain it as much as possible. So when acting for both buyer and seller, the bill of costs include profit cost, miscellaneous purchase cost, mortgage cost, all with VAT. For example, Mr. Daniel is a buyer. For profit cost, debit Mr. Daniel's ledger £500 and credit profit cost £500. Debit Mr. Daniel's ledger £100 and credit HMRC with £100. That's VAT we need to keep in mind. Miscellaneous purchase cost debit Mr. Daniel's ledger £42 and credit HMRC £42. So mortgage cost, we need to understand debit Mr. Daniel's ledger £110, credit costs £110, and debit Mr. Daniel's ledger £22 and credit HMRC for VAT for £22. When Mr. Daniel pays the total £984, debit cash account £984, business section, and credit Mr. Daniel's ledger £984 business section. So money in with two entries in business account. This example shows how each component is properly accounted. So for all money move, double entries once it starts and once it lands for both of them. Now, receipt of payment for mortgages. The mortgage advance from the lender is paid into the client bank account until completion. It is considered the lender's money. So once it is completion, things go different. And how to record it: debit cash account client section, client, and then credit borrower's ledger account client section. That's money for the bank. Even if the advance is for a partner, it is still treated as client money until completion. So the next thing is mortgage redemption. Oh my goodness, that's important. That's what I love it. Vendor and lender. When redeeming a mortgage, the solicitor ensures the lender is repaid and the lien is removed from the property. The charge is removed from the property. Separate client ledgers are required for both vendor and lender. The vendor usually pays the lender's cost. First, the solicitor sends a bill, records the entries, then transfer the debt to vendor's ledger. That's how it works. Separate ledger account. Lender's cost is paid by vendor most of the time, and transfer of debt at the end. This is how mortgage redemption works. So, completion. Vendor receives purchase money. Upon receiving the purchase money from the buyer, the solicitor pays it into vendor's client account. And how to enter the entries into account: debit cash account client section, credit vendor's ledger account client section. Then to pay to the lender: debit vendor's ledger account client section and credit lender's ledger account client section. This ensures both vendor and lenders are accounted for. Most of the time, lenders are bank or housing societies. So, the next thing is redemption payment for lender. After completion, the lender is paid from the client bank account. Debit lender's ledger account client section and credit cash account client section. You have done your liability, and that completes the mortgage redemption and removes the lien on the property or charge on the property. When it is vendor only redemption, so at that point, if the solicitor acts only for the vendor, the redemption money may be sent directly to the lender or via the client bank account. Debit vendor's ledger account client section and credit cash amount client section. This ensures proper recording and compliance with the SRA rules. That's what we need to understand. So the next thing is our favorite SQE1 tips and common pitfalls. Identify whether You are acting as agent or stakeholders, not Scotland. So this affects deposit handling. Record all client money receipts and payments in client ledger. Separate ledgers are optional for lender and borrower, but funds must remain traceable. Which money belongs to whom, like at that point. Correctly distinguish partners versus client money to avoid breaches. So that's what is very important to understand as convincing solicitor. So pitfalls: releasing stakeholder deposit without consent, mixing partners firm money with client money, incorrect VAT entries in mortgage and conveyancing bills, and failing to maintain audit trails for both lenders and borrower. So as it is our last session for solicitor accounts, the method that worked for me, I just created my own sheet for every transaction, and afterward just went through it. Like in the first section was to understand and reverse my understanding of credit and debit, because you are not an account holder. You are someone who is dealing with money. So that's what you need to reverse your mind. And afterward, look at like where money is moving from, why it is moving, where it is lending, and then double entry. That's it. That's not very hard. Of course, it's not hard for me now, but it was hard once. And I assure you, like, if you just give some time and understand the basics, you will be all good in solicitor accounts. Wish you all the best. And if these videos and sessions helped you, so I would request you to hit subscribe, share it with your friends. Thank you very much. Ta-da.